This conference will now be recorded.
Hey, what's going on, everybody? This is Carlos, CEO of G.A.R Capital. Welcome aboard. Doing a quick video. Well, I won't think so. It won't be that quick, to be honest with you. It's a big Super Bowl week. It is earnings week. This week, starting the 27th of July. Today is July 26th, a Sunday. So I decided to make a quick video. It's kind of quick, not quick, going over each of the big companies and what to expect and some of the levels I want to draw in regards to including the charts here. So, I'm going to go over every single one, but I'm going to go over the ones that we usually trade so we can kind of prepare ourselves ahead of time. So just keep in mind in regards to earnings, guys. Remember last week was Microsoft and Tesla, and if you played Tesla, you pretty much got killed if you had any calls or puts. It was just chop all over the place, pretty much just kind of stuck in that range. So just be very careful if you are playing earnings. I'd rather people play earnings ahead of time, ahead of the report, and get out and maybe leave a runner than to actually place a lotto just because more times than not you're just going to lose the premium due to just being chopped up from the time decay or the theta, if you will. So just keep in mind that a couple of big names like Amazon and Apple will report Thursday after the close. So you're better off playing or trading that if you get your alert or trading it ahead of the number. Sometimes these big tech companies or big mega cap companies that we trade usually tend to run up into earnings. So it gives you an opportunity to place some calls ahead of the number. Also, keep in mind that the premiums are juiced, what we call juice, meaning that the prices go up because there's more volume, there's more volatility to be expected on these names. So again, just kind of keep that in mind. Understand 1 to 4% risk. Don't just do lottos just because. Make sure to have an idea of what names you want to play, the levels that you want to play. So again, if you want to get a pen and paper down, write these down. These will help you out. These breakout and breakdown levels, these alerts, so that you can go ahead and actually trade them when you see them. So again, just understand, keep your risk 1 to 4% as always. And if you're an investor, guys, this is an opportunity to take a look at the earnings from the stocks that you probably own now. So again, any kind of dip, I'm the type of person I like to buy dip for long term. Again, all my stocks I own, I'm owning minimum 5+ years. So any kind of quarter move doesn't make a difference to me. But I do like to see their numbers. I like to see their earnings. I like to see their revenue. I like to see their profit margins. I want to see the growth of EPS and so on and so forth. So again, like for example, I saw Tesla last week. I love their numbers. I have not added to it personally at this time, but I do own shares. But again, last time there was an earnings report that I did add some more Microsoft around the 203 area. I went ahead and added some Netflix after their earnings. Again, I'm confident in these companies. I'm confident in their growth long term. Again, regardless of COVID or anything else. Again, these are names that I want to own, and any kind of dip I want to go ahead and buy and get it at a good price because I like the story, I like the management, I like their growth potential longer term. I'm not worried quarter by quarter. I'm not worried month by month. I'm looking longer term. So again, when you're investing in a company, especially a mega cap company or a tech company or a growth company, you have to understand that you're buying the story, you're buying the management, you're buying the growth potential. So again, does it matter if Apple misses their quarter this quarter? Probably not. If anything, you're probably looking to add some more. These are an opportunity to buy maybe some names that you've been wanting to buy. For example, me personally, I haven't bought Shopify yet. If they have a pretty rough quarter and they actually dip or they actually have a great quarter and they soar, I'll try to see if they can, depending on their earnings report, I may want to go ahead and initiate a position there. But again, obviously, I like when stocks go down because it gives me an opportunity to buy some more. But that's just me. So on red days, I do like it because it gives me an opportunity to buy some more stock and names I like or initiate positions in ones I have not yet bought. But again, you have to look at stocks, guys, as you would anything else. If there was a Ferrari for sale, and they'll never happen, but a Ferrari dealership saying, hey, we're going to have a 10% off sale, 20% off sale on all our automobiles today. Would you go ahead and buy that automobile? Probably, because you understand the value of the Ferrari. You understand the value of that brand. Same thing with stocks. Stock market is really the only entity where people don't buy when they're on sale. They only buy when it goes up in price. There's no other instance where people buy stuff when it actually goes up in price. Think of Black Friday shopping when these flat screens are on sale. You guys run into people in general just buy those flat screens, the 50-inch, 60-inch, because they're $300. because you inherently understand the value of that television. So understand the value of the names that you're buying, the stocks that you're buying longer term, and the price will kind of dictate to you what you want to get into. Again, price is really up to you. Price is what you want to pay. Value is what you get, is what I always say. So understand that, maybe to you, Apple's not worth buying at 400. Maybe Apple's worth buying at 360. Depending on how many shares you buy, you buy 10 shares, that's $400 savings. So again, and that gives you another opportunity to buy one more share. So again, don't fret over a couple of cents here and there. As always, kind of look at it as a whole. Like if you want to buy that stock, obviously you want to get it at a discount. You want to get it at, a little more of a downside. But again, it gives you an opportunity to take a look at these names, for them to open the books and to see exactly where they're moving forward. What are their guidance? What are they expecting next year for 2021? Where are they expecting their growth segments to be? What has slowed down? What's accelerated? What's working for them? Are they paying more of a dividend? Sometimes companies increase their dividend, or they do a share buyback, for example. If you're a bank, probably can't do that right now because of the Fed. But I'm saying if you have a big cap tech company, you have more of a telecom company, those kind of names, they give you an opportunity to get some more dividends if they offer it. But big cap, mega cap tech, like we're seeing here, you got to understand that they don't need to pay a high dividend because they have tons of growth. So again, as an investor, if you are younger, you want to get some longer term aggressive growth or better growth stocks, like a mega cap stock, like an Amazon or an Apple. You're not going to, well, Apple does provide a dividend, but Amazon does not. So they don't need to, because they're using their profits not to pay back shareholders, but to provide value to shareholders from growth and their segment brands like AWS, their Whole Foods, their delivery, e-commerce, their lending. Now, I mean, they have everything. So we're going to go over that each one. So let's kind of go over together what earnings releases are coming and when. So here is the earnings releases coming up. So I could tell you right off the rip, on Monday, there's none of those names that I'm interested in, even trading or investing in. So we're going to skip Monday. I'm going to put a big ol' X here, and we're going to move on to Tuesday. So Tuesday, I know everyone likes to talk Pfizer. Pfizer's symbol PFE. So with Pfizer, it's all about the vaccine, Operation Warp Speed for the COVID virus. So I do own some Pfizer. I have not added to it at all. So we're going to go ahead and start with Pfizer. That's ticker symbol PFE. So let's go ahead and get to it. I'm going to go ahead and expand this chart here. This was my Tesla chart. I'm going to expand it so you guys can see, and we're going to go to PFE, and we're going to start with the 1 hour chart. So 1 hour chart here from left to right looks very bullish. We understand that. So let's kind of give ourselves some context here. I'm going to go ahead and bring up on the daily chart, and you could see basically a V-shaped recovery since the March lows, and then a little bit of a dip back into June. About 50% of those lows, maybe a little bit more of that, 61.8 if anything. If we want to go ahead and add some Fibonacci levels, we could do that. We'll go ahead and add them right now. I go to my percentage sign here. I'm going to go from the top of 43.17 all the way down to the low point of 27.88. 27.88 right there. So you can see we did dip to about the 23.6 fib level. Again, people have it inverse. I do. The highest is the 100% retracement. Some do. The lowest is the 100%, so it's backwards. But again, this is how I do it. So we're right on the 61.8 fib on PFE from the 52-week highs. This is a 1-year chart. So 37.66. What levels are we looking for a breakout? Well, first of all, I could see right off the rip on a daily would be 39.90. 39.90 would be a great breakout level to go ahead and get in. A breakdown level to me would probably be around the 200-day moving average of 36.38 or around 35.53, which is our 50% retracement. That seems more feasible to come through because you have a little more downside here as we're testing that Fibonacci level to 61.8, then testing the 78.6 fib to 40. So because we're at 37.66. Let's go ahead and bring up the hourly chart, and you can see 37.25. That's the after hours quote. And now we're back in the hourly chart. Kind of gives us more of a trading approach here for calls. So we're really breaking down. That one candle brought us down below the 100-day moving average. Until then, it pretty much kind of stalled there after a warning drop as people took profits from the news of the Operation Warp Speed funding. Again, no vaccine has been created yet, but Pfizer is, I would say, the leaderboard here. So what you're getting is kind of a back and forth between Pfizer, Moderna, and Gilead and all these other names. So I've been saying just buy IBB, which is the biotech ETF. and you have everything in there. But I also own some Pfizer. I've liked Pfizer for their dividend anyways, and I wanted to get Pfizer before even this COVID stuff was going on. I bought Pfizer, and I have not added to it, but again, I do own it. So 37.25 is current. We're at the 100-day moving average. Should we get back to down to 36.02, which is your 200-day, is really anyone's guess. But again, looking at here, we should be able to bounce off this 100. If you want to get a break above, we have to get above 39.90 to get a breakout. So right here, we're kind of just range bound, guys. Not much going on. We could break down below here at the open, and then you could probably test 36. But until then, there's nothing really much to play here. I'm going to go and place an alert here at 36.60 just to kind of give us some eyes looking forward. Then your next level would be that 50% retracement on the daily of 35.53. Until that happens, there's really nothing to do here on PFE. They report on Tuesday anyway. So again, I don't want you guys playing a lotto on PFE when you may not even get any volume. You get chopped up. So take a look at PFE as more of an investment level. That if you want to go ahead and buy some more, I would say to buy some more right around the 33.72 level. That's where probably I would be buying some more here. I wouldn't buy at 35. I'd probably get it at around 33. That'd be a good price to get into. Next will be McDonald's MCD. That is in the morning of Tuesday, July 28th. And we're going to go ahead and take a look at this name. I do own this stock as well. I'm not added to it. Let's go ahead and bring up the daily. We'll go ahead and add some Fibonacci levels. 221.93 is the 52-week high. Let me go ahead and get out of this. 293. I'm going to go down to the low of 124.23. And here we go. So when it comes to McDonald's, you can see again the March low, nice bounce here, kind of that V-shaped recovery, and kind of testing that that range there of the 78.6 fib of 200. That 200 level seems to be that level of demarcation. I remember Walmart had the same issue with that $100 level, and then we broke out of that. So McDonald's, again, it's a consumer discretionary, you can call it that. But again, I think McDonald's is something that's never going to go away. People are still going to eat out, and especially with the DoorDashes, the Uber Eats of the world, people are going to get it delivered. So again, McDonald's is going to be around forever. They pay a decent dividend. It's a stock you do want to own long term. Great management as well. But if you're looking for a trade here, your best bet is that 200 level. So again, I believe that 200 level will be broken. We did get a little bit of a flush at the end of the day, just like PFE you saw, 197.50. If there's a trade I would like to play here, it will probably be the 200 calls. And I'll tell you why. The 200 calls look very interesting. The only issue is on Tuesday. So what we need to do is get in on a Monday. Let's see if we get that continuation to the upside. Maybe we can go ahead and break that 199 level. 200 would be nice to play. If you want to play the 205s, maybe the 202.50s would probably be a little more prudent. But the 200s seem to be the level to play. So I'm going to go ahead and do a couple of drawings. And there's one I want to show you here. Is this ascending triangle here? And you could see here that it has been kind of keeping up in that level there of about 199, and you could see that ascending triangle. Now we could break that level here of about 197.18. My guess is that we do break above that anyways and bounce back, and we stay within that triangle anyways. So the last time we've kind of seen this triangle, we saw a breakout before, and you could see it here right around, I believe, 2 Fridays ago, kind of that same deal. You could see that breakout ascending triangle, same thing. And then you had the same triangle here. Again, what you want to see is take a look at that previous resistance as it kind of knocking on the door. So we had 2 ascending triangles consecutively. This should be the third, and we should get that break. So again, McDonald's looks very interesting. I would take a look at those 200 calls. So MCD 200 calls, just keep an eye on them. Again, we could get that break. I know it's ahead of earnings too, and they report on Tuesday. Let's see the price action on Monday and see if we can get maybe in the 205 or 202.50s. But they look very interesting to me with the ascending triangle. Now, keep in mind, guys, it is reporting on Tuesday. You can get into Friday's expiry, which would be end of the week, and it kind of gives you an opportunity for the market to just churn that earnings report and see if they get that continuation. So again, I do like this. You got 2 ascending triangles, 1, 2, 1, 2, 1, 2, and we should get that extra break to get to around 201, maybe the 202. And if we get to the daily, you could see that that is a big resistance level, 201.02. We should be able to gap to around 209.30, 209.82-ish or 210. You can see that gap right here, that initial gap. And once we get to around 210, that basically recoups all the loss of the COVID loss of 2020 in a sense, since we dropped from the February highs. even though the highs of McDonald's was back in August. So again, McDonald's look very, very nice here. I do like these kind of moves here, these ascending triangles, 3 consecutive ones. It looks very, very interesting here. All right, so the next one is going to be AMD. Now, AMD is something that has, as a stock that I've owned, I bought on dips, and I love this company. There's only 2 chip companies that I want to own. It is AMD and it is NVIDIA. So AMD has been kind of slow moving the past couple of weeks, but yet we just had a nice breakout above this fib here of 59.27. Nice boost after that Intel earning, and then a continuation to the upside. We played it last week, as you remember. If you held the runner, you kind of crushed it. Friday was absolutely parabolic, but it was expiry day, and then we had earnings coming up, so we did not play AMD together, but we played it earlier in the week. And you could see, I mean, there's not much to see here that you have just a continuation to the upside. The thing with AMD is that when they report, they tend to fall. So I think with this kind of move, yes, you did get a breakout on the daily. You got a breakout on the hourly. It's just with these kind of moves, they tend to fall after earnings. So I think here it's kind of tough because I hate to predict. So here I'm going to stay away from AMD, but I would not be surprised if we dip. If we dip below 64.86, then I would like to play puts after earnings to test the 62 level. Even the 60, but I would say 62 would probably be the best move. So again, what you want to break here, you get a little bit of stall here. It's not going to go straight to the moon either. But again, I think after earnings, we'll get a little bit of a pullback back to around 66. If you get to 64.86, it'll give you an opportunity here to kind of get back down to 62. And again, I'm great with AMD long term. I love the stock long term, but again, these kind of parabolic moves of 18, 17% usually don't last the next day. They usually come back down. So Monday may be an opportunity where you get a little bit of a pullback. I think we do on AMD, just too high, too fast. Maybe a lot of short interest there, and they got squeezed out if anything. So again, 64.86 would be an interesting level to break. Then you can keep an eye on the 62. So that's kind of the levels I'm looking for here. You don't want to play calls. I mean, it could soar. If it does soar after earnings, then all bets are off, and then you can go ahead and see. Now you're probably asking, if as an investor, where would I buy AMD here? If we break below 64 or 6, I would say around 60 or 62, I would go ahead and reload on AMD. Next one here, Visa and eBay report, not a ton of volume, honestly. I'll go ahead and set up Starbucks. Starbucks is another name that has decent volume, and Starbucks is a stock that I own. I also own Visa too, but when it comes to options, it doesn't really move. Starbucks, pretty much chopped. Not much here going on. The hourly chart looks like a mess. I like it long term, obviously. You can see that we kind of broke above that 200-day on 83.57. This is back in June 9th, and then kind of pulled back. So not much going on. Let's go ahead and add some fib levels here and see what we're looking at. 89, 99, 72. Again, that 100 level has been a tough one to break. 52.02, kind of right at the 50% retracement level from the lows. So again, decent, but again, just chop. Not much going on. So this stock, I just don't touch it. Leave it alone. You're just gonna get chopped up. You're gonna lose premium here. There really isn't nothing to play. I mean, if you break above 77.50, maybe, I guess, but until then, I don't see any reason to play this stock whatsoever. Even if you break it below the 50% retracement, you'll probably get to around 73 and kind of stay around there. I think there's better opportunities for your money instead. So next is Shopify, which would be Wednesday in the morning. And Shopify is a decent one. I have a high here of 1054.51 for a breakout that I've had earlier. Now we're going to go ahead and bring up the daily. And again, you could just see 1054 was that resistance, and then it came back down to 929. To me, if it breaks below 900-ish, I would probably buy some more shares. Yeah, 900 seems to be that level. So I would say 900, I'll probably buy some shares. I have not bought any yet, but I would love to get into Shopify long term. I'm kind of kicking myself that I never did buy it, but looking at it here, it's actually pretty bearish here short term. So just like I said, the 900 level is a good level to buy. I would say 900 is a good level to buy some puts. If you do buy puts on Shopify, if you break 900, 870 or around 850 would probably be your next target, because that was the previous top here back in May. If you start getting to continue to the downside, right around 770 is probably your massive support. 780 is your level. But until then, 900 seems to be that level to hold on the 4 hour. On the daily, you could see that 900 level still kind of holding up. You're going to get probably some consolidation here and there, kind of stay between the range of 900 and 1,000, but it is continuing grinding to the upside ever since March of 2020 because of COVID. So again, online e-commerce has been absolutely on fire. Internet of Things, Shopify is a good way to go. But until then, in regards to trading, not much going on here. Again, I think a break of 900 to the downside would probably be a good chance to maybe pull a trigger. I'm adding a couple of shares if you have some, or maybe initiate a position. I would not be surprised if we do break to the upside with Shopify. If you do, you still have a long range to go. The 200-day is nice, but it's in the middle of the range. Not much going on. 1054 is your high. You need to break that first. Next one is Boeing. Boeing has been an absolute darling to everybody. Trading darling, let's just say. You're looking at it here, just pretty much straight to the downside, kind of a descending triangle on the 1 hour chart. Let's go ahead and bring up the daily. Again, you could see that descending triangle. I have an alert at 160.27 for the break, which is right near the 100-day moving average on the daily. I still think we have a little more pain ahead. More cancellations. Airlines are not doing so well. You saw the earnings report from United and also Southwest Airlines. So again, I think Boeing has a little more downside. Now, if they have earnings, they can obviously give some kind of surprise report and a source. I think the last time we had a report from Boeing, they did soar. What was that report? Actually, I think they did. They reported here, and it did go up, but then it kind of continued back to the downside, and then it soared back in May. So with that being said, be very careful on this one. Place the alert at 160.27. I know it's a little far out, but if you get that break, then it'd be an interesting play for puts. But until then, I would not play it. If you're playing the upside, you have to break 194.54 first. That's $20 away, and we're basically in the mid-range because we're $14 away from the low. So that's where we are in Boeing. It's a tough one to play. I would not touch it. Spotify is a name that I own as well, long term. You can see just basically the last 20 days, just chop, chop, chop range. I put an alert at 244.15 as a level to buy some more. On the daily chart, you could see very similar to a Shopify. Again, March lows, Internet of Things, everyone's at home, music, Spotify is the way to go for me. That's a stock. It's an app that I use daily. So again, I like to invest in companies that I actually use. So interestingly enough, Spotify is one of my favorite apps to use. Our podcast is on there. So again, that's something that I want to own. 244.15 break to the downside would be an interesting play for puts. But for calls, you need to break out of this range here around 281.18. So let me go ahead and place that alert there. That's the daily. That'd be the level to play up for a breakout. I don't think we could get there. But again, we're at 266, and it has been pretty much just range bound about $20 for the past 20 days. So we just got to see what their earnings report. If you get a break to the upside, I play the 300s, 300 calls on Spotify. Okay, next one moving up here is Wednesday. I have Facebook after the bell. So Facebook is a fun one. Facebook has been a name that has really just been a bane. And again, I had the ascending triangle break. We did break, and then we fell back. And Facebook is a name that I own, but again, it has been a tough one to trade because of headline risk. You could see the ascending triangle doesn't always work. We had the break, and then we just got chopped, broke out, broke down, and it's just been kind of keeping up with that 200-day until the last fall, which I believe was Thursday. So Thursday we had that flush due to the China headline stuff. We're at 230 now. So your real support here is its consolidation level around 225. This is a tough one to play here, just for the simple fact that Facebook has a lot of scrutiny in Washington, and especially with the election and all that stuff. So it's a really difficult one. I wouldn't be surprised if they soar. I wouldn't be surprised if they fell hard. So it's a name that I'm going to skip here. If you did play Facebook, you have to play the recent breakout again. 245.01, and you have the breakdown of 225.18. It's a massive range, but that's the only way you're going to see it. And keep in mind with Facebook, all the tech giants or tech CEOs will be testifying in front of Congress regarding antitrust and all that stuff. So that's not happening next week or anything, but again, it's something to think about with Facebook. A lot of traders may just take some profit. It's actually done very well this year. It's one of the growers, FANG names, and you could see it just broke out of that. It broke out of the February highs, as you could see. So again, it did hit an all-time high of 250, and it's absolutely been a tear. Anything tech, and we've honestly been playing in a massive range between May and now, and nothing really has gone on. It's been about a $15 range since February. So I mean since May, and we're just looking. I think that we're going to knock on the door. I still am bullish on Facebook, and if you were looking to add some more shares of Facebook, honestly, the best bet would probably be around this level, the 225 level. Maybe the 220 level would probably be your best bet to add some. Next one would be PayPal. I also own stocks of this company. Very similar to Spotify, Facebook, and all these names, and Shopify with the COVID thing. And again, touchless transactions, we know the drill. You know, everyone wants to pay each other online. PayPal's also a company I use. And 8207, you can see that bottom all the way to the breakout top. And it's done very well. 172.56, basically double its money since the March lows. So let's see here. Basically chop on PayPal, not much going on. You can't see really anything that's going on. Again, breakouts, breakdowns, it's an ugly one. And that's why I'm really going to say here is just skip PayPal. If you're looking to buy some PayPal, 160.89 is your previous highs. Go ahead and put that level there. That's your retracement level, the previous breakout. That's why I'd go ahead and reload 160.87. One more is Qualcomm for Wednesday. Qualcomm here, nice break again, nice recovery of those February highs from the March lows, 88.89. Again, 5G play, we know the drill. But when it comes to Apple 5G as well, they're delaying, I think. And again, the chip makers that is not named AMD all fell on Friday due to China and all that stuff. So 84.11 would be a nice level to take a look at, maybe buying some if you were looking to buy some. But if you really want to break out, it's going to be 94. 94 is really your level. So again, until then, it's kind of just chop range on the 1 hour, not much going on there. I like it long term, but again, until you break 94, not much going on. And for here, until you break 86.68 to the low on the 1 hour, it's not much to play. Now, it is closer to the lows than anything else, but again, most stocks did fall that hard on Friday. So Friday was really a buying opportunity if you're looking for stocks. And I think Qualcomm does beat. I think Qualcomm does raise. I think they pay also a great dividend. So Qualcomm is a winner long term. If you look at the daily, you may not get the same growth as you would a PayPal, a Shopify, or Spotify, but again, it has been pretty consistent with the market in a sense that is outperforming the S&P. But again, you see that V-shaped recovery from the March lows, which is a really good sign. And we're going to go ahead and move on to Thursday after the close. We got three big companies. First one is Amazon. And Amazon, what more could you say? One of my favorite stocks to own, probably my second biggest position in my portfolio. I'm just kicking myself that I didn't buy it sooner, but Amazon is an absolute beast, and you can see 3008, but it is off the highs of 33.44. Moved so high so fast, it's an absolute monster. Let's look at the hourly. Now again, I will not be trading this stock because it is ridiculously expensive to trade. For the price that you're paying to trade it, I'd rather just own the stock personally. 3002. I have an alert at 27.22 to the downside. Again, they're going to cash burn. They're going to spend. We know the drill with Amazon. They're always investing. Any kind of dip on Amazon, you have to be a buyer. It is too good of a name. It's too good of a company. Management is amazing. They're basically gobbling up everything. 27.22, I'll be buying with both hands. 3002 is where we're currently at. 33.34. That'll break by the end of the year, in my opinion. But just don't trade this name. Kind of like Apple. Just don't trade it. Just own it. And speaking of Apple, what more can we say? Nice little bounce here on Apple, 359, I believe 369.70 at end extended hour trade close. You could see that rise up and then that big fall because of that China headline. I think 400 is still in play. I have 354.77 as my level to reload on the stock. That is the most, that stock is the one I own the most of in my portfolio of Apple. So you could see 370 here. If I had to play the stock, this would probably be the name I'd play for calls ahead of time. If you break above 372, I would play calls on the 380s or the 385s, which is your 200. If you play the 385s on Apple, let's go ahead and place an alert. I'm writing it down. Above 372.75, the 380s or 385s, the 200-day is your level to play. So again, 372.75 to the upside. I would play the 380s or the 385 calls for this week, and then you pull the ripcord right before the earnings report, take your profit, and then you can leave a runner ahead of time or you can leave a runner for the actual report, and then you can actually see if they do beat. I do think if they beat with a great guidance, if they talk anything regarding the 5G Apple phone that is not delayed, if the 5G Apple phone is delayed, the super cycle, expect the stock to drop, and that is a buying opportunity for you. So I would go ahead and buy some more shares of Apple on that drop. But if they say anything in regards to they're delaying the 5G super cycle iPhone, it's supposed to be in September. If that is delayed, the stock will drop very hard because the pricing and the guidance was already included with that super cycle. So again, you could see that break at 354. Thursday will be a very big day. We'll be on top of it. But again, until then, ahead of time, because this is on Thursday, that 372.75 break, we break that. I would play the 380s or 385 calls. Prices may be a little juice, but that'd be a trade I'd play because you're basically playing the bounce back to the 200-day. So what we say reversion of the mean. Next one here and last would probably be Google. Well, I'll do one more after that. Google's an expensive one. GOGGL. I played it once this year. I made about 172% on it. But again, that was just me on that one. You can see just pretty much range bound here. It's an expensive one, guys. If you do want to play Google, it's all about antitrust now. It's all about Internet of Things. It's all about kind of political censorship, cancel culture sort of thing. You can see this big drop here. If you want to play puts, 1490 seems pretty decent. This level here. Again, this report's on Thursday, so it's going to be a difficult one. If you're playing to the upside, 1575 would be the play. You could probably play the 1600s would be the highs, and you could see right into that level, right where that level I put those alerts is pretty much the range from the top here. After that break, that V-shaped recovery, we did hit the high of 1587. But again, we're kind of stuck in this range. Need a breakout or a breakdown on that range to really do anything. So again, I'll keep an eye on it and see what we can do. And then last, we'll do Gilead. I know that's a name that people always talk about. Again, another name in regards to the COVID vaccine. It's been a choppy one. You could see just a $6 range, but again, looks very violent and very choppy. All the news is really pre-market on vaccine headlines, and then it just goes down or just chops around. So I prefer you don't trade this name. It just really isn't worth it. If you want to play it, you really want to play this violence here, be my guest. I would say just stay away, by the IBB, and who the hell knows what they're going to report, if they're going to be ahead of the game or not. So I'd rather just stay away, guys, ahead of time. Friday, we have Exxon, AbbVie, Pinterest, Caterpillar, and Merck. Again, reporting on Friday. I really don't want to play it. In Chevron, I own ExxonMobil. I own Chevron long-term anyways. So again, the only thing I'll be watching is really their talk of their dividend cut. And because we saw how Halliburton was hit in regards to their revenue generation and the demand for crude. So that's a tough one. But ExxonMobil and Chevron is a name I'll be holding long term anyways. The only thing I'll be really looking at them with those companies is really just the dividend and see if they're going to keep it. And you could see kind of like Boeing, kind of a descending triangle here anywhere, the test of 41.39. If they do break down below 41.39, then I would probably reload a couple more shares and add to my position on XOM. And on CVX, kind of same deal, but kind of pretty much outperforming ExxonMobil in a sense. And you could see that level here of 88.64. Break 80.24, I'd probably go ahead and be a buyer here. Chevron and ExxonMobil. But in regards to trading it on a Friday, I would not. Pretty much just range bound on both. You could see not much going on here. I really want to see some really good trade patterns there tomorrow to play it. But ExxonMobil looks interesting in order for a put, if anything. But I really wouldn't play it there. There's one thing I want to tell you guys is QQQ. There's another way to play big cap tech without playing too much premium. Is QQQ. You could take a look at that, and you could see that 100%, that 100 retracement level 258.93 was broken. My support level here would probably be around 250.12. I think we bounce back anyways. The sell off and the rotation out of big cap tech looks like just profit taking anyways. But again, we should be able to get that bounce. If anything, it should be around 253.16. I'm gonna go move that up to 253.16. I put it at 253.11. Let me replace it. 253.16 seems to be the level to play for that bounce. We're below the 200 and the 100. Yes. If we break down below here, then I would probably target around the 248 level for some puts. If we do bounce, 259, 260 seems to be the level to break to the upside. You could play the 200-day moving average of 261 or the 100-day moving average of 262 if you're playing the break or the bounce here. So again, if you don't want to trade Amazon or Apple personally, or PayPal or Facebook or any of these big cap, Visa, for example, just play the Qs. Qs is a little cheaper. Again, you have everything into one, the NASDAQ 100. So again, that'd be a good play to go by. So there you go, guys. That's what we have for earnings. And I hope you enjoyed this video. And if you have any questions, feel free to DM us on Instagram. You could always feel free to comment on YouTube. If you have not subscribed yet on YouTube, remember we do our weekly, or excuse me, our daily morning note every market day, 9 a.m. Eastern Standard Time with me, Carlos, the CEO. I answer questions and preview the market. So make sure to like and subscribe. As always, we're trying to get to 4,000 subs so we can do a live trading session. Have a great rest of your weekend, guys. Thank you so much for joining me. I can't wait to get started for the week, and we'll see you then. Cheers.